Hello, investors, and welcome back. Let's talk about DraftKings, and they are in more states than any other online sports betting operator. They just got out of the Goldman and Sachs Travel and Leisure Conference. Their CEO, Jason Robbins, just spoke about how there's been a big shift from the conversation of market share to profitability and how that's great for the company. You can see by this slide here, DraftKings 36%. It's in 17 states, and there's also more states to come very soon. And they don't even have the three largest states. Also, they're shifting their group, their engineers, on different projects. Now, they are spending a lot in marketing spend, and I want to do a comparison with another player in the space just to show you how to pick those growth stocks. And I do believe there's still momentum in growth stocks, but you got to get the timing right. This is a seasonal business, so let's not delay any further. If you're not subscribed to the channel, go ahead and do that. Hit that thumbs up button. Let's get started. So let's take a look at the latest Q10 filing in the last 3 months ending in March 31st. We've got a revenue change percentage of 33.6%. So revenues are increasing, but if you come down here to the net loss, you could see that it was a net loss negative of 35%, almost $500 million. So I'm looking at the marketing spend being one of the largest chunks of money, and I just want to understand what's happening there, and also I want to share it with you. So it says that our B2C segment accounted for substantially all of the increase, with 72.4 million in increase resulting from activities to acquire and retain players in new states that we are operating in. Such marketing costs include advertising and the development of marketing campaigns, as well as headcount, technology associated with analyzing, developing, and deploying those campaigns. So as they are adding states, these campaigns are very expensive, but I think that this is either a 1 to 3 year period before they start to see that money come back. So just really important to understand that those are some of the costs. Now, something that I'm very excited about is the 2022 sports betting bills that are going to be passed, and they highlighted in their Goldman and Sachs Travel and Leisure conference call a few of these that they're excited about. You can see the ones listed here, and California on the ballot could be a big one of the three that they haven't accomplished yet. And the ones that they highlighted in their call were not only California as one of the big three, but Texas and Massachusetts and North Carolina, Georgia. I mean, those are all large ones, but it looks like they're getting very close with Maryland, Ohio, and Puerto Rico. That's going to bring their percentage penetration rate up to where it's at right now. I think it's at about 46%. That's going to bring them to 50%, and they don't even have the three largest states. California should be a big one with 12.5% penetration added for 65% penetration. So really important to understand that that catalyst could be California signing bill towards this stock. Now, is it a good price right now? You can see it's trading at a 4.39 price to sales trailing 12 months. And if we take a look, and this may not be a fair comparison, Penn National Gaming, or PENN, this is one that just has more of a history. We can see the price to sales trailing 12 months of 1 or 0.92. Now, why is that? Does it make Penn a better buy than DraftKings at this price? I don't think so, and I'll explain why. Just stay tuned to the end of the video. Now, I do want to look at the options play because we have out of the money call options for June 17th, which I think is too early. If you're going to buy these option plays, I say go all the way out to January 20th of 2023, where there's 207,000 out of the money call options. Of course, this is going to be putting us into that seasonal period. And if you want to go out to January 19th, 2024, that's great. But January 20th of 2023, if you scroll down here, you can see some of these being added rapidly. And I would say the $20 call, which is trading at about 178, it might be a little bit lower than that, seeing that this has really done a pullback. But if we go back up here and we look at the call options for June 17th, and we take a look at what's available or what's most popular for June 17th, you can see we've had some significant volume increases here at the $15.50 range. So after this pullback, is it possible after the FOMC meeting that June 17th we could see a run up in this price? Now, Penn, I want to take you back and talk about Penn because Penn, as you can see at the bottom of this slide, they did increase their guidance. So what does that mean? Is increasing your guidance is a good thing. That's a positive thing. And we can take a look at their revenue. So revenues from 2019 to 2021, you can see that increase by each of these sectors. So that's good. I mean, but is this a buy? They've got a great revenue number, but what is it about their model that isn't pricing in a lot of growth? Let's take a look at what the analysts' estimates are. Now, this is DraftKings, 22, 21, 25, 26 analysts. That's a good mix of analysts putting in their feedback on what they expect for sales growth next year. And this is estimated numbers, 46%, 106. Now, these are quarterly buckets. At the end of the year, 62% growth. The following year, 23% growth. Now, if we look at Penn, there's much different. We've got about the same number of analysts, but we've got much lower analyst expectations. And I believe that's why you still want to take a look at these growth stocks and not maybe some of these stocks that have just been around a while. And we'll take a look at the chart so we can get some pricing and maybe some timing, potential estimate to put this on your watch list and take another look at it. Now, this is a seasonal business, so I wanted to look at DraftKings in quarterly buckets. So this is DraftKings income statements for the last 8 quarters. And you can see right here around 12 and 3, this is when you see the revenue increase. So right now we are in this period, and you can see that 6 and 9 right here, they are much lower. But overall, we have revenue increases. We don't have stable gross margins yet. But, this is also seasonal, but you want to see those gross margins become just a little bit more stable, but they're pretty impressive. 3 months ago or 3 reported periods ago, we had a low of 19%, which seemed like an outlier, but typically it's above 20 to anywhere to 50% for your gross margin. So they got to stabilize that, and that's going to have a lot to do with their operating margins and their other operating expenses, which are really heavy right now, but they do have cash on the balance sheet. But I would say that the timing is between now and next quarter to buy this and add it in if you're looking to get that bounce and in that quarterly bucket time frame. So if you want to take a look at those income statements and make sure that you're buying the stock either this quarter or next quarter, that's when you should see that run up leading into the sports betting seasonal time frame. Now let's take a look at the charts, because I want to look at Penn first just to show you years and years ago, 2018, all the way to the run up, the recession happened. This goes all the way down to the $5 range before it runs up all the way to $141 with really no reason to run up last year, just given their revenue that we just looked at was, not that great. It was okay, but it doesn't justify that much of a run up. Now we're getting into this period where we're starting to reset. You could see that bear market, scare, it really pushed this down, and fear of a recession has started to make it flatten out. But now DraftKings, it might be another story. Matter of fact, when we had that recession pullback, you can see that this was, and still is, a little bit right there close at that $11 mark is where this pulled back, and this ran up. There is growth in the future for this company. So right now, do we retest? And this is the question. Can you be patient, and do we retest, and do we have enough catalysts coming up for the stock? Do we retest that $10 range to add this to your portfolio to get those call options? I believe you stay tuned this week and next week to see where that price goes. That's all I got. Let me know what your thoughts are in the comments below. Is DraftKings something that's in your portfolio, or are you considering adding it? That's all I got. I'll see you in the next video.